Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on a Monday, and we will start with US equities, which ended largely flat despite rebounding sharply from their session lows, as President Trump said that he expected to speak with President Xi Jinping to move forward on a potential trade deal with China. The S&P ended little changed after being down over 1% at one point, while the Nasdaq 100 and the Dow settled 0.1% lower and 0.1% higher respectively. That said, the S&P gained 6.2% for the month, its best such performance in 35 years. Recent economic data has been mixed, and with tariff-related headlines continuing to evolve almost on a daily basis, investor confidence has been low. Elsewhere, the VIX fell for the fourth day in 5. The dollar rose a little while the 10-year Treasury yield dropped to 4.4%. Gold ended back below $3,300 an ounce, and oil traded soft on the potential OPEC Plus production hike. This has been confirmed with the cartel announcing on Saturday that output will be hiked by 411,000 barrels per day starting July. At home, the rupee dropped in line with most Asian peers and ended the day at 85.58. The currency pair is trading near all of its major moving averages at 50, 100 and 200 days. In data, India's Jan to March GDP rose 7.4% on a year-on-year basis, beating expectations of a 6.8% jump. Coming to stocks, the Nifty finished 82 points down at 24,750, with the India VIX falling another 2.1%. The NSE 500 small cap and mid cap indices also finished down but outperformed the Nifty. 60% of the NSE 500 stocks dropped. 8 of the 12 main NSE sectors finished lower, with IT and auto falling 1.2% and 1% respectively. PSU banks were the best performers, up 2.9%. The best and worst performers on the Nifty were Eternal, which rose 2.4%, and Bajaj Auto, which declined 3%. Technically speaking, the Nifty remains caught between support at 24,462 and resistance at 25,116 with a bullish bias. Immediate support rests in the 24,614 to 24,677 area, while near-term resistance lies at 24,893. Meanwhile, provisional data showed that foreigners withdrew 6,450 crores on Friday. On to derivatives, and the Nifty's put-call ratio went to 0.77 from 0.86, while the Bank Nifty's went to 1.04 from 0.85. Options concentration for the 5th June expiry is showing a trackable range of 24,800 to 25,000 for today, with the highest change and addition seen at the 24,800 strike for calls and at the 24,400 strike for puts. Note that we have ignored distance strikes that are far out of the money. Volatility analysis shows that the demand for 1% out of the money puts was slightly higher than for similar distance calls, which means that volatility traders were buying hedges. Speaking net index options activity, foreigners and proprietary traders were bullish, while retail investors were bearish. Elsewhere, foreigners' net short positioning in index futures rose to nearly 84,000 contracts from 78,000 contracts as they continue to ramp up their bearish bets. Looking forward to today's session, the GIFT Nifty opened 85 points higher. Asian markets were in the red, led by Japan. US index futures were down an average of 0.2%. Speaking stocks, Chennai Petroleum and Ratnamani were at horizontal support, while Hindustan Copper, Motherson Sumi and Sri Renuka Sugars were at horizontal resistance. Adani Energy Solutions, Adani Power and Alchem were at trendline support, while Vodafone Idea, Dabur and Crompton were at trendline resistance. Talking Brent, 80% of stocks were above their 80% of stocks in the NSE 500 were above their 50 and 100-day averages, while the number was 49% for the 200-day average. PMI numbers are due from both India and the US today. That wraps up the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Have a good day and take care.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.